I normally have these sessions on Sunday, almost about the same time. And I normally don't, whatever material I have, I just repeat that because this session is supposed to be for pretty much chart reading. Uh, how I read the charts is what I'm going to share. Um, and so the material that I have, I normally repeat that. If you have taken this class before, you will see, same things that you have heard me saying before, uh, which is good. You can review the material, or if you have any questions, you can ask me, and I can clarify.
వెళ్ళిపోయాడు అప్పుడే సుధీర్.
Please, if you're not asking question, have your mics muted, yeah, so it doesn't disturb. So the way I do sessions, you like to use a whiteboard to write stuff. I will switch to charts, and I will actually, I'll show you the actual charts, how things look and everything. So I will keep switching back and forth. It's easier to understand. I'm old school, so I'm gonna get started. I think we have enough people join already. So I hope whoever is joining, they at least know to open the chart or a charting tool. Okay, there are many different chart softwares. Each brokerage have their own charting um, tool. Okay, so I hope that everyone knows how to access a charting tool and how things look in a charting tool. I use TradingView. Okay, so I will be using a lot of TradingView to show the charts and everything. Okay, now when we are looking at charting tool, there are a lot of tools, indicators uh, that are available to us to do our technical analysis. Okay. If you're looking at my screen on my right hand side, as I said, mostly all indicators are lagging indicators. They will tell you when something has already happened. Okay. I am still. I don't know, ma'am, if you know an indicator that can predict where the price will move to in the future. Do let me know. I would love to know what that indicator is. But a lot of the indicators, they're looking at what the price has done in the past. Okay. Two components that's very commonly found in any indicator: price and volume. Okay. So those are the very common two things you'll find in majority of the indicators. They're looking at past price, past volume, okay, and then they use that information to draw the indicator. Okay. By the time these indicators pick up the past price action, the past volume action, things are already late. Okay. So that's why I said all the indicators are lagging indicators. Okay. They tell you something when it has already happened. Okay. So you can use the indicators more as a confirmation wise. Okay. not as okay. Yeah, it's happening now, so this is where I think the price is gonna go in the future because the price may not go as you come up with, as you expect to, looking at an indicator, and that's where a lot of people fail. They're looking at a certain indicator, more than one indicator, right? And they're telling you what the past information is, and you're trying to predict a future price action. It's not gonna happen. Okay, most likely you're gonna fail. Okay, um, and that's what normally happens actually, right? I mean, I'm sure it has happened to you. Okay, so I don't use indicator. For me, if you want to know where the price can go in the future, levels. Okay, you look at the past levels, strong levels. I also look at the zones. Okay, there are strong zones. There are not so strong zones, weak zones. Okay, so you need to identify those. Okay, where are the strongest zones? And in my last session, I actually had given an example looking at NVIDIA, and I think I probably have it. I'll pull up NVIDIA's chart and I'll show you. We discovered a very strong zone where they keep on bouncing from it. Okay, so if you can identify these strong zones and you stay patient until the price comes back into those zones, okay, you will actually end up making very good money. Okay, no indicator is gonna tell you where the price is gonna go to, where you can spot some things in the indicators. Okay, they can be part of your setup. They can be part of as a spot to pick up things. Okay, but don't rely on indicators 100%. Okay, levels you do need levels. So what I have covered in my sessions, I have covered support and so anything that's related with levels, support and resistance, market structure. Market structure is still levels. Okay, there's the change of character, break of structure. Within the market structure, you have swing, which is the external structure, the bigger structure. Okay, we call that swing structure. Okay. And then there's the local structure. This is the price action within the bigger structure. Okay, internal structure. Okay, so there is the swing market structure, then the local market structure. I have also covered the breakouts and the breakdowns. Okay, these are still levels. What is a breakout? When a resistance is broken, right? And then we consider that a breakout. What is a breakdown? Is when a support is broken, right? Then it's a breakdown. Okay. Then fibs. Um, fibs. Fibonacci is a tool, not an indicator. Uh, Fibonacci gives you levels. Okay. Okay. I'm gonna make an exception on Stochastic. Okay. I have used Stochastic a long time now. Okay. It does a fairly decent job. It can fail. If you combine this with the levels that I'm talking about, then it can work really, really nicely. Okay. Um, with the starch, I have also used MACD. Most of you have used MACD in one way or another. Okay. Again, these indicators you have to combine with other things. Okay. You can't just rely on indicators 100%. Okay. And then zones is my favorite. And they're still, levels based, where you see a strong support that can become a demand zone, where you see a strong resistance that can become a supply zone. Um, there's also the order block. Now, the order blocks and right here. Yeah, yeah. Order block and demand zones, supply zones, slight difference here. So order blocks and zones, uh, they can be very similar. Slight difference. In order blocks, you're actually looking at the order flows, right? Whereas a lot of orders come in. Okay. For that, you have to look at the order books. Some other tool that can show you at which price, there are a lot of buyers who are coming in and all that. So, you can predict a order block. Uh, Order block, you can look at in the chart, okay? And if you can pick up the demand zones and supply zones, if you can pick up the demand zones and supply zones, most of the time you will find that these order blocks sits in those zones, okay? Wherever, yeah, you'll find a big order coming in, it will create a zone. If the order is for selling, then it will create a supply zone. If the orders are coming for buying, it will create a demand. Okay, and then I'll show you some examples how to pick those up. But this is pretty much my way of doing technical analysis. I do so like I said, there's Fibs and I'm sorry, Stosh and MACD are a couple of the indicators that I use, but they're normally are for confirmation. Okay, I look at levels first. Okay, I look at levels first. Okay, I wait for the price action to come into those levels. Okay? If I'm going for a buy, I'm looking for a strong support zone, strong, right? And then once the price comes in there, then I can see where the stash is and what the MACD is telling me. Even then, there's one other thing that I like to do, and that is to confirm. Just because a price action is coming to your support level, doesn't mean anything until it's confirmed, until you take the time to confirm that it's gonna move back up. Or what if it just breaks your support? That can happen, right? So there's yeah. So VWAP, I don't use. I also use VWAP. So okay, so I think I need to put another slide out here. There's the swing trading, and then there's the intraday trading, right? And there the your indicators and your tools is gonna switch a little bit depending on trader you are. You know. So okay, here's the swing trading. Uh, Before I go into these the things, swing trading and the intraday trading, which is the day trading, I'm gonna write some more things here. Swing trading and intraday trading. So here are some of the notes on the side, which should give you a little bit more information. Okay. So first point, most day trading is gonna fail. Ooh, did I say something wrong? Most day trading is going to fail. And this is from my experience. Okay? I mean, you could be a very good day trader and make probably like $1 million a month. You don't need to be joining here if that's the case. Oh, if you do end up making like $1 million or something, do let me know. Most day trading is going to fail. Second point, higher the time frame, and some of you have joined my class before. What's the rest of the part? Rajesh, higher the time frame, then what? The better levels you're gonna get. As simple as it is.
Oh, man.
The better levels you're going to get.
Oh, sorry. Now I got the question. Yeah, I guess you typed the answer. Sorry.
Yeah. Okay.
I wasn't paying attention. My bad.
Yeah. Higher the time frame, the better levels you're going to get. That holds for even if you're doing day trading, right? Um, you go down to like 1 minute, 3 minute, right? A very less chance of successful trades you're going to get. I mean, you can again. I'm not talking about some few of the exceptions ones. I mean, you can have a really killer setup in 10 seconds, okay, in a 10-second time frame and make like, $10,000 a day. If you're that kind of trader, do let me know. I want to know what you're doing, okay? All right. So these are my two key notes. Most day trading is going to fail, okay? And second, higher the time frame, the better levels you're going to get. Now, intraday trading, again, so my levels things don't change. Okay, so I use levels for both intraday trading and swing trading. Okay, because like I said, indicators is for confirmation only. They're lagging indicators. They only tell you what has happened in the past. But levels, zones, Fibonacci Fibonacci is really great if you know how to trade using Fibonacci. That's the only tool you need actually. If you just learn how to use Fibonacci, you seriously don't need anything else. It is that great of a tool? Okay. Um, but so in my intraday trading, I'll use something else called Viva. I'll also throw in so yeah, Stosh is also here. I just use Stosh for confirmation, and it does work. I'll show you something. Okay. So yeah, intraday trading, I do have VWAP. Why VWAP? So, like the name says, it's a volume weighted average price. Remember what I said just like 10 minutes ago? 10 minutes already? Maybe like 5 minutes ago. Okay. All indicators, their main two components are what? Volume and price. Okay. Now, this VWAP combines both of them. Okay. It draws a line. Okay? It just simply draws a line looking at the past volume, past price. Okay. This is the mean level, the middle. What it's saying is price will come to the mean level, to the middle level. That's what this is. Okay. Now the price will hang around the middle level, the middle price level. In this case, there is a volume too, right? There's another thing. If the price stays above this, most likely the chances are the price is gonna stay above. The VWAP is gonna keep going up. Okay. If the price is below VWAP, most likely the price is going to stay below the VWAP. Now, this is only true for the intraday. Okay, there will be days where you will see the price keep touching VWAP multiple times. That's a chop. That's the range bound. Okay, so this is where the VWAP really works nicely. So VWAP can tell you trend, can tell you trend. So if the price is above VWAP, it's gonna stay. gonna keep on moving above Viva. It may. I'm not saying that it's not gonna, take some dip. It is going to take dips, but the chances are it will keep on moving above. It's gonna come down to grab liquidity, which liquidity is another topic that we can talk about in detail in another session. So trend, it can show you trend. It can also show you when the price is going in a range. So don't send me message because then I have to like read what you're saying. Just unmute yourself and throw stop. Because then if I start reading, then I lose my chain of thought. Okay, so that's the difference. Okay, so swing trading versus intraday trading. The only thing is I have VWAP thrown in there, and that's for a reason. In the intraday, you will see a lot of what I just said to be true. If the price is above VWAP, most likely it will stay up above VWAP. It will keep on moving higher. And we can take a look at some of the examples. So let's switch. I'm gonna switch back to the chart here. Uh, give you some of the free indicators that helps me with the same things. Um, you know, uh, the market structure mainly and the order blocks. There is a free tool. It's called Smart Money Concept by Lux. It is a free indicator. You can also buy the paid version of it. So let me just bring that in. I have the paid version, so I don't use the free one. But so right away when you bring that on your chart, you will see these zones here. Okay, so they weren't there before. They weren't there before. So when you bring that in, um, you will start seeing them. Now these are actually order blocks. Okay, and you can see how the price has reacted to it, right? So the price came here, it goes up, comes down here. Normally these don't come. So again, all indicators are lagging indicators, right? So if I go back into replay, I want to see if where was this order block when we were okay. So it was showing that. Yeah. So there was an order block had come when the price was moving up, right? So the price had moved up. First, it created this order block. So it wasn't there before. So let's see when it comes. Okay. So we were here. The order block was down. Okay. As the price goes higher, it will create a new order block zone right there. Okay. So the how I have traded with this, I will not chase here. I'll wait for the price to come into the order block. So let's see when that. Okay. So we see that it came actually very close to it, and that's the problem. That's another problem. Okay, look how close it came. Did I even touch? No, I didn't touch, but it came very close to it. So if you are not, if you are waiting for it like exact touch or come into this, you already missed it. Okay, but let's see if it doesn't come to somewhere. Okay. Oh, there it is. Okay. Well, by the time it came, it broke it. So yeah, that was the only one. So let's say if you were trading this, right? on a like intraday or like a short swing, and you're like, okay, I'm gonna go in, take a call when it touches. Okay, so I mean, this touch was very nice, right? So there was a order block. This was a bearish order block. So if you were looking to go long, uh, two things. How I have traded in the past. Okay. Um, Either this bearish order block needs to be broken, needs to taken out. Okay, or the price needs to come and retest this the bullish order block. Okay, so what we saw was that it actually does take it off, take the it takes out the there, right there. Okay, so not only it took out the bearish order block, it created a bullish order block. So this was your sign. Okay, you can go long. There are some settings that I don't like that weak high. I don't really like to see that. Let's this here. Okay. So in this setting, there's a, let me see, there's one other thing, and that is called the fair value gap. If you know what fair value gap is, we can cover this in another session also. But this indicator is such a nice indicator. It gives you order blocks. It gives you fair value gaps. Here, it also gives you high and lows on a daily, weekly. Okay, so it'll actually draw the, there you go. Right there, it drew a level, previous week high, previous day high, previous day low. Okay, so this indicator is very nice, and this is free. I mean, I can see why why this guy, whoever developed it, has a paid version and a free version, right? I mean, it's just such a nice indicator. There was one other thing. It also has a premium and discount zone. You can see how it works. I didn't fully backtest with this. To me, it was kind of distracting me. To me, the order blocks was doing just fine. So that's why I just use it for order blocks. Recently, though, I started using fair value gaps also. So it's good that it has a fair value gap in there, and I can if there's a fair value gap, I'll show you briefly how that puts into all of this technical analysis. So I just covered the order block. Okay, so here it gave a bullish order block. So you just open a like a call position, long position, and you just hold. And we saw that it. There you go. You could have made like a really good money. Yeah, there you go. Okay. So this is how this indicator can work. It can show you this order block. Not only that, it actually draws these here. So let me turn off the order blocks. Yeah, I don't see that. Just focus on this piece here. This is called real-time swing structure. What is this structure? This is the market structure. Okay. Remember I said that there is a swing structure, which is the external structure, bigger structure, and then there's the internal structure, which is the local structure. It actually gives you both. Uh, yeah. Uh, so the way it shows you both of those, okay, let me take off those levels also. Isn't it? Uh, okay. So you will see there are two types of BOS written. Okay. What is this BOS? This is the break of structure. Okay. Now, if you just focus here, okay, you will see there is a BOS also with a dotted line. Okay, this is a local structure. This is a local breakout structure. Okay, let's go back. Let's go back in the past before this local breakout structure came. Okay, so right about here. Let me see. Why is this green? So before this local bearish breakout structure came, we had a swing bullish breakout structure, which was drawn with a solid line. Okay, so wherever we see this solid line here, that is the swing structure, the external, the bigger structure. This is the external, same as bigger. Thomas spelling EXTER. This is a bigger structure. Okay, so if you were looking at this, yeah, okay, you should know that we are in a uptrend. Okay, a swing bullish break of structure comes when something is in an uptrend. I can go even further back, and you can see that, okay? In an uptrend. Okay, so now I come to here. Okay, I see this. This is already in an uptrend. I got a swing bullish break of structure, but here in here, I'm getting a local bearish break of structure. I should know that it is gonna in the future. Okay, now we're talking about future. Remember what I said, indicators don't work. They don't tell you what's going to happen in the future. Market structure does. Levels, they do, right? So market structure is how you can see what has happened in the past. Market structure, if I'm back here, I can come back here. Okay, so locally, smaller structure gave me a bearish chalk. Chalk is change of character. What does that mean? It's warning me that locally, okay, not externally, within the structure, the trend is shifting. Okay, within the structure. Okay, so where was this structure? That structure, you could have marked this as a swing. This is the swing low. This is the structure. Right here. Okay, so within this structure, it's dipping. Okay, but this is also a opportunity to buy. Okay, so you got a bearish change of character, bearish break of structure. Let's see, where do we get? So remember, overall, it is in an uptrend. What am I looking for here? A bullish local change of character. That will be my sign that I can go long now. Let's see when does that happen. Mhm. I still didn't get it. I got another bearish break of structure. It's okay. I know it is still being played within the structure. It is gonna give me sometime in the future a bullish local change of character, which will fall in line with a swing uptrend, swing bullish uptrend, right? So let's see when does that happen. Look at all that, right? This is going to be like, oh, yeah, yeah, it's time to buy. Yeah, it's gonna go. It's gonna boom. No, it's not the time to go. Remember what I said. Look, it didn't break that external structure, right? This was the swing low. It didn't break it. Had it broken this, what do you think we would have gotten here? Gujesh, pick on you today.
It would be a breakup structure at that point. Had
No,
it gone low.
no. What kind of
It's a
before
change
breakup
of,
structure?
sorry, hang on a sec. There'll be a change of character, right? Because if it goes down,
Yes. Here, if it had broken this, we would have gotten a swing,
oh,
change of character, a bearish,
it'll be bearish. Yeah.
and that would have been a sign. Hey, no, it's no longer gonna go up. Most likely, the chances are it's gonna go down, but it didn't break it, right? Oh, there you go. Wait, hold on. Right there.
Question, is there an indication there when it's moving sideways that it's going to go bullish?
Uh, yeah, yeah. I mean, I have said right. Consolidation can change the trend. It can flip the trend. Let me take this one check. Okay, so, yeah, yeah. Where did it go? Consolidation right about here. This was the consolidation,
Yeah.
and look what happened. So it created a consolidation zone. Look, the price drops back inside here. Okay, it retests this consolidation zone and then start moving. So yeah, I wish they had this consolidation zones in there to mark to pick up
Uh,
these consolidations.
Sorry,
That would have been really nice.
a follow up. Now, if you look at the if you expand the period towards the end at the consolidation where it goes bullish, right?
Hmm.
So we do not have engulfing anywhere here. That will
Yes,
be not
good,
not
good
these.
pick.
So we have daily. This is a daily, right?
This is a bullish engulfing. This is a 1 hour chart.
Oh, okay, in that case, then we have yeah. After the engulfing, it just never comes back down.
No,
Okay.
so your bullish engulfing happened right in the consolidation zone. This is pretty good.
Mm-hmm.
So okay, so look, so we were looking for a bullish local changer character, which came right about here. Okay, but even before this came, if we could read the charts better, we could have actually picked this, right? And then right when so okay, so consolidation came first, price drops in there. Okay, it gave us the bullish engulfing. This was the time to go. This was the time to go long. Right? If we had gone over here, I mean, we could have been
Yeah.
making really nice money. But so there were two entries here. This was the entry after looking at the bullish engulfing. Okay, and now this gave us a swing. Sorry, the local bullish changer character. So we would enter on the next candle right about there. So we'll enter. There were two entries. I mean, the great entry was here, but you could have also entered here, and then you would. And now with that, you also got your swing breaker structure, and now you could have kept on holding for a few days. Retest again. Keep on going because we already analyzed that it was in an uptrend. We confirm it with a local bullish changer character, right? So I mean, if you had entered here, this was a perfect entry right about here. But you could have entered here also. It does go back to kind of retest this. See, where does it reach? Same zone. And that's the problem with the things like Tony Torres look comes back down to retest the same consolidation zone, and this is what I was talking about. So uh, the zones, there was a demand zone. So this bullish engulfing actually created a demand zone like this. So this was your look at that touch. Let me take off this consolidation. This was your demand zone.
Yeah.
Okay, and look at that touch. Look at this touch right here. This kind of like,
Yeah.
right in there.
Okay.
So this engulfing pattern created that demand zone. So this is normally how you draw your demand zones. And normally the demand zones are created like this, where it's very similar to an engulfing pattern. Okay. And then your demand zone. So normally what they say is a big impulsive candle. Okay, you go the candle, the other color, right? So if this is a green candle, you look at the red candle before that. Okay, and you draw to create the demand zone. You draw it from the low of the wick. You can actually go to the high, or you can go to the open of that. Okay, or you can go to the high of that. So you will cover this whole thing, and you will see that it comes right in there. Touch that. Yeah, all of this here. Okay. So what they're saying is this impulse candle, the price before that or the candle before that, that creates that demand. It'll be the other way around for the supply. You will then look for a big impulsive red candle, and then the green candle before that is where you will draw your supplies. It comes to retest that and keeps on moving. Mhm. So what did we learn? We learned to see the market structure, which will tell us in which trend this is moving. Okay, and then we can use the local structures, and look for the dips. Pretty much look for the dip to for us to buy the dip to align in the same trend. Okay. Um, you could do the same. So I mean, you don't. I mean, this is a free indicator. That's the only reason I mentioned this. But you should actually be able to do all of this without indicators. Okay. Um, it's actually not that hard. Okay. And you can, I mean, so I just pointed here where the swing bearish, chalk would have came. And if you really think about that, where I drew this, okay, is just pretty much simply breaking so remember what I said on that on my whiteboard. Okay. So if this is a support level right here, if this had broken, that would have given you a swing bearish change of character. Okay. And where did we get the swing bullish vertical structure? Look, it broke this resistance right about, right? This is where we saw that coming. But I don't need this to tell me. But you don't really necessarily need it if you can just tell by looking at the chart. Right? But I mean, since it's free, why not use it? And there was another. No, okay, so I'm just gonna mark it here. Here was the another the, either a swing breaker structure or local breaker structure. Let's just confirm it with the indicator right there. Okay. So I mean, I had told you that before even looking at it. Okay, swing breaker structure. So it's not rocket science at all. So now again, this is where is the structure here? Swing low, swing high. Okay. Now what date is this? This is super for you. Yeah. So on this, I have traded a few times. It's a really nice, I mean, we have already seen 1 hour chart that it is in a nice uptrend. So I have taken a few trades in this, given me money every single time. All because I was able to see the chart. I could see that, it's just in a nice bullish uptrend, and yeah, I took a fall position few times. I even mentioned in my group. So if I play this, there you go. Here's another microstructure. Give you a nice dip over here. Who's be saying something? How to figure out swing low or swing high? Yeah, I just mentioned that. Oh, so you can higher the time frame, the better levels you're gonna get. Yeah, obviously, 4 hours is better, higher than 1 hour. Okay, you want to get really good quality trades, stick with a higher time frame, 4 hours. Okay, um, so the way it works, I'm gonna switch back to my whiteboard. All right, so yeah, I can use this. Okay, swing trading. Yeah, if you're so time frame wise, if you're doing swing trading, right? Weekly, weekly is the best. Okay, you look at the trend in weekly. You look at the levels in weekly. Okay, you confirm it. Okay, you look at the levels in weekly, confirm it in a smaller time. Smaller, you can go like hourly or 4 hours. Okay, remember we are looking at levels in the weekly. Okay, so yeah, you can go down to like hourly for your confirmations.
Okay, so I mean, I've been using this indicator, and this is a good one. And I
Mhm.
mean, I would say most of the time it works. At least it give a direction. I mean, where the market is going to
Yeah,
go. So, but I still didn't get this swing. So, I mean, I understand that we go from higher time frame to lower time frame.
yeah,
Keep looking at order blocks and past history and all. But if you are trading it, I mean, say this ONDS, it's in strong momentum, right? Going up for
yeah.
last 2 3 days. So,
Mhm.
what would you pick? You will pick weekly, 4 hour, or 1 hour?
No, because okay, before my work was done already before I even took the first trade, right? So okay, so the way yeah, you want to look at so tomorrow, you come across some option flow, right? And you're like, oh yeah, this looks good. Somebody told you, yeah, this looks good. So how would you go about looking at the chart? So let me share back let me go back to my chart.
Okay.
Okay, so somebody actually, so I'm gonna test this out. Somebody shared. I even put it in the Telegram. Which one was that? That was the Roblox, so RBLX. So let's take a look at it. So let's okay. So Roblox, the trade. So I put something in the Telegram. It has an expiration of October 31st, which is only 3 weeks away. I am not gonna pull a weekly chart for something that's only 3 weeks away. Right? It makes no sense for me. Okay. If an expiration date is, a leap, if it's a leap option, few months to almost a year, then it makes sense for me to look at into weekly. Okay, so why would you want to look at a weekly chart? Uh, uh, you want something where you're holding it for at least a month, over a month, close to 2 3 months. only then it makes sense for you to look into the weekly. Something that has a short expiration, next 2 weeks, next 3 weeks, weekly doesn't make sense. Maybe you look at, start with daily.
So,
Okay.
I mean, I didn't want to
Yeah.
disrupt the flow, but just one question. So, when you say swing trade, I mean, what's your like average holding time? It depends on price target or like number of days or based on
So,
technicals.
okay, so swing trading for me is anything which you hold over a day. I mean, that's actually the book definition, right? So what is a day trade? If you open something in the morning and you close before the market closes, that's a day
Hmm.
trade.
Right.
So whatever is swing, whatever is not day trade, right? So if you open today before the market close and you hold it overnight until tomorrow morning, that's a swing trading technically, right?
Yeah,
So
by
within,
definition, yes.
yeah. So within the swing trading, yes, now you can say, okay, are you doing a short swing? Are you doing a long swing? What kind of swing you're doing? And that's based on the expiration now. Okay. So if your expiration date, yeah, you found something really nice option chain and it has expiration in 2 weeks, 3 weeks. That's a short swing. Um, okay. That's a short swing. For leaps,
Mhm.
yeah, leaps will be something going over 2 3 months. Long. That's a long swing.
Okay. Are you going to cover those options? I mean, how to figure out like for how long to hold this trade and all? Will they be part of?
Not in this session. No, not in this session.
Okay,
This
thank you.
session is yeah, it's only for the charts. Yeah, but I'm gonna give you some tips. Like I'm already telling you like which expiration to look, and when you do get something, when you look at some good option chain, depending on what expiration it is, then you want to look at a certain time frame, right? So short swings, yeah, look at daily. Okay, so I'm gonna pull my. I don't have an order. So okay, so look at the Roblox in a daily. So I put the option chain in the Telegram. What was it? So that's the 135 call, October 31st. I see the price already sitting at a bullish. Oh wait, I was in the. Oh, sorry, never mind. I was in the replay mode. Okay, so I see the Roblox right now, um, pretty close to the bullish order block. Okay. I want to see. Okay, so we look at the swing structure. So I have gotten a swing breaker structure, bullish swing breaker structure, and once it came, the price has gone up, significantly up. Here, um, here now is giving me a local bearish changer character. Then it goes up, gives me a bullish local change of character. Whenever you see this pattern, what does it tell you? It's a range bound. When it's giving you a chalk here, chalk there, okay? Then it give you a local bullish breaker structure, but right away the price dropped. Okay? That was because it was in the range, and this was kind of a fake move up. Okay? And now it's giving you a bearish local change of character. But we know that it is overall in an uptrend. Okay. And here is your bullish order block. Okay. What you want to do now is have the price come into this. And then from there you can confirm. Okay. To really, have it like a winning trade. But so that's the daily. We can also look at the 4 hours. Okay. Even the 4 hour one is showing the bullish order block a little bit away. Okay. Not only that, here I have my the fair value gaps turned on, so it's actually giving me a bearish fair value gaps also in 4 hours. So this is in a strong bearish move right now. Okay. I can even go down to 1 hour and same thing. Okay. I see the order blocks down here. So here you can confirm. Okay, now the what the option chain that I have is what is it? 135 call October 31st. Because it's dropping, the price dropping, you probably will find this option chain, in a cheaper price right now. Okay, so this is where it gets a little bit tricky now. Okay? If you wait for the price, if you wait for the confirmation to come, let's say confirmation comes somewhere up here, by that time, this option chain is gonna be expensive. Okay, at that point, you may not even want to use this option chain. Maybe you want to look at in the same ticker with a different option chain that could be cheaper, could be better, right? So that it becomes a little bit complicated with the option. So normally when I'm looking at option chains, I don't look at option change over the weekend. It defeats the whole purpose. Okay. Over the weekend, you only want to draw your level, okay, on the ticker symbols that has, pretty good option volume. Okay, if you're playing option, if you're the stock, if you just buy shares, then you want to look at the ticker symbol that has good volume, for share trading. You draw your levels over the weekend. Okay. Monday or during the weekdays is when you do the actual trading, looking at the actual price, what the price action is doing and everything. Okay. So I mean, this works really good with the option. Okay, so this is why a lot of people just play weekly. They draw their levels over the weekend. On Monday, if price hits their levels, they will open a weekly options and they will close it by Friday. Unless the price really jumps, the same day or the next day, then they will just collect the gains then. Some messages here. Okay. We're coming closer to our session here. I hope you found this valuable. I'm gonna switch to review the market, for the last week and kind of see what happens next week also. So I'm gonna be, and then I'll also pull up some stocks that I I have a query. Okay, so it picks up some stocks that has done really good last week. So I'll pull those up. We'll look at their levels, a little bit of technical, and we'll look at also their fundamentals, and then we go from there. So I'll start that in about 5 minutes. I'll take a quick break, and then we'll meet back in 5 minutes.